Now we have the management of Lupin joining us as promised. Lupin has emerged as the first generic player to get the US FDA nod to sell the billion-dollar respiratory drug Spiriva generic in the US. This approval has come through earlier than expected, and the key positive is that this is a limited competition drug for the next 3 years. To understand the opportunity and how much could it contribute to Lupin sales, we have Ramesh Swaminathan, Executive Director and Global Chief Financial Officer, Head Corporate Affairs at the company. Ramesh, good morning. Great to have you with us here on the program here at CNBC TV18. Thanks very much. Prashant this side. Congratulations first up on this. The market's very excited, as you can see. Could you tell us, when do you launch this drug, and could you estimate the opportunity for the company? What would you net, over the next couple of, after launch the first year, what would be net earnings for Lupin from this drug?
Firstly, thank you for having us on. This is obviously a very important development. This is something which we have been expecting for quite some time. It's about $1.2 billion in terms of size. So, and of course, minus, in fact, the discounts that we give on this, as you would know, with the market itself. It would certainly be a very meaningful addition to our overall portfolio in America. And for sure, we think it will certainly move the needle when it comes to margins and the like. In terms of the launch timeline, we think we would be in a position to launch it in Q2 of this fiscal.
All right. Good morning, Mr. Swaminathan. So Q2, we've got that the time horizon out there, but give us a rough number in terms of estimated sales. For the first year, that's FY24, what kind of a number are you looking at? The street is working with $30-40 million odd, and $100 million, do you think, by 2025?
I think I don't want to go down the path of actually conjecturing on numbers and the like. As you would recognize, it's a pretty large drug. It's very important. And we do believe, being the only player in the market, and from a generic perspective, we would be able to get pretty good market shares and, of course, overall volumes and concomitantly the sales as well.
Okay. So, Mr. Swaminathan, hi, good morning. There are also estimates on, roughly how much price erosion, a generic drug like this would see. Some estimates say maybe 30-35%, but you're best placed to answer that, so do tell us.
And I think it will be premature for me to talk about it, and perhaps, not appropriate, because given the fact that we are the only player, so obviously it is going to be lower than potentially the generic, the innovator itself. But we do have, the ability to price. And we would, of course, do what is necessary to get us a good, what is absolutely, in the keeping of things when it comes to, in fact, being the only player in the market.
Okay, so just a sense of, timelines. The launch is going to be by second quarter. By when do you think you can fully take it, to the market? By when should we see the entire potential flowing in?
Yes, the ramp up would happen. It will happen over a period of time. We think it will certainly have the potential to do very well, being the only player. But I don't want to speculate on, in fact, the way volumes would turn out over time.
Mr. Ramesh, what would be the factors which are keeping you from giving us a number? Could Nithya Balakrishnan of Bernstein was with us earlier. She was saying that in many cases what happens is the innovator themselves drops prices quite a bit. We don't as of now know of any other filers for this. Perhaps there aren't any, but are those risks as you see them?
No, it's just that, as you yourself said, there are several moving parts and so on. I think it's fair to actually, surprise the market. And to that extent, we're just being conservative in saying that, we would get a very good market share. But we don't want to speculate on, in fact, the volumes or the sales for that matter at this stage.
Okay. So, Mr. Swaminathan, give us a sense of, really what the rest of the market opportunity is looking like. If I have the right numbers, I think you were at your US sales for FY23, you were somewhere in the vicinity of about 600 million. So with this huge blockbuster drug coming in, tell us more about the rest of the pipeline as well, and how you're looking at the US market. What is your take on, say, overall competition, pricing pressure in generics, and what the year ahead looks like to you?
Well, too many questions in the same breath, but I'll try to answer that. In terms of our run rate, we are doing about $170 million on a quarterly basis. With the addition of products like Darnavir, Vernicillin, and now Spiriva, we would certainly do much better than that. And so obviously the current year looks pretty promising with the newer drugs that we're speaking about. And going forward, as we have always spoken, we have a pretty strong pipeline lined up on the respiratory front for sure, and the complex injectables. We've been working on quite a few of those, and the pipeline. In terms of the biosimilars going forward, the current pipeline in terms of OST, the inline portfolio. So we are confident about the immediate future in America, and obviously this has a pretty big impact when it comes to the overall performance of Lupin itself.
All right, Mr. Swaminathan, from around $170 million, or the street is banking in that, given the kind of approvals you gradually move to around $200 million on a quarterly basis. Now, margins have been a key focus area as well, and the worst of margins appears to be behind you. The question is, by the end of this year itself, can you get closer to around the high teens, the 20% margin odd mark? Could you tell us, when do you get back to the 20? I was just looking at it the last many quarters, you haven't hit that 20% margin. The last time I think was June 2021. So by exit rate for quarter 4, do you get to 20% again?
As you very correctly pointed out, so essentially we have been working on a host of initiatives, essentially, when it comes to cost reduction, in terms of various, initiatives at the factory level, at the R&D level, and the like, and of course the SG&A spends. And there has been a lot of inefficiencies that we have corrected over the last several quarters. There's some more to come for sure, but the top line certainly, would make a huge impact when it comes to, in fact, the bottom line, which is the EBITDA margins also. And with products like Spiriva coming in, we can only move to a higher level. We have guided for a run rate of over 18% by the end of this fiscal. So our aspiration at the very least would be to get to that, and perhaps higher as we go by.
So is 20% an outside chance that we see it by the end of this year?
Yeah, for sure. Yeah, an outside chance for sure.
Ramesh, since we have you on the program, I have to ask you whether, and this is important because, some will say, well, this is a one-off opportunity and the broader pressures, pricing pressures in the US generic market are still there. I remember many months ago when you joined us, you said that the US generic market was like El Dorado. I think that's what you said. And you said, and now there is a drought. Is it getting a little better overall? Will it continue to get a little better? Have you bottomed out as far as pricing in the US is concerned?
In a general sense, there is still a lot of pressure when it comes to, in fact, the OST business itself. I did speak about the fact that what was a feast for quite some time has now turned out to be a bit of a famine because of the intensity of competition and because of the fact that there has been consolidation of the channel partners leading to price erosion of a higher magnitude. And well, the pressure is on. It's kind of steadying at I would say higher single-digit numbers. It really is a function of, in fact, individual products. Certain products kind of erode faster, certain products erode much lower. So it is really a function of that. But as with insofar as we are concerned, we are kind of pivoting to more complex products. Like, as you say, Spiriva, the inhalations portfolio, the injectables portfolio, the more complex ones there, biosimilars and the like, and for sure specialty at some point of time. And that, I think, is what will actually move the needle in terms of margins over time.
Absolutely, and I think the market's been realizing that as well, Mr. Swaminathan, and stock's been flying, going through the roof last couple of months. So let me ask you, when you talk about moving up that value chain, getting eventually towards specialty products, this approval came in slightly earlier than some of the market participants had kind of penciled in. So maybe it'll give people hope that we get more approvals earlier than anticipated. When you talk about your pipeline, which are the next main ones that you're anticipating? Anything more this year, for instance? And when you talk about the longer term outlook on, let's say, specialty, more complex generics, are we talking FY 25? Any new launches there?
For the current year, we can really come out saying that we'll have Darunavir, which is also an exclusive product for us. We have Arniclin, which is also an important product. Spiriva, from the respiratory portfolio. We already have Albuterol, which is doing still pretty well. We have, in fact, perhaps the highest component of the number of products that we have on the respiratory front across. And this is actually across the world. We also have Foster, which has been launched in Europe. So we've been working on, in fact, a broad range of products, so to speak, and that is what will actually pay us dividends. Equally, we've been doing a lot of stuff when it comes to complex injectables, and of course the biosimilars portfolio. We already have a few products when it comes to the biosimilars. Still early days, but we do, we're building up a pipeline for the future, and that is what we actually deliver.
Mr. Swaminathan, because of all that you're saying, expectations run high, right? And, some of the expectations say that your quarterly revenue run rate, US revenues, should probably improve. You just told us it's around 170 million right now, that it should be northwards of 200 million in the very near future. What's the outlook? Can you do that this year itself? What's the new quarterly run rate?
Insofar as the OST is concerned, there is going to be price erosion, or at least not perhaps to the same extent as in the past, but it is certainly going to be price erosion. But as you pivot to more complex ones of the like that you're seeing today, you would certainly see this going up. And it is obviously within the realms of possibility when it comes to the kind of volumes, the sales numbers that you're speaking about.
Okay. All right. Ms. Swaminathan, just one quick query. Any more pre-approvals, any pre-inspections will be there for Spiriva, or it's all cleared as of now? Because that's a couple of questions that we've been getting as well.
No, from our perspective, it is all in the clear.
It's all clear.
Yeah.
All right. Ramesh, we'll leave it there. Thank you very much. Congratulations once again, and appreciate you joining in with that perspective. And good luck as you roll out that drug from the second quarter of FY24, as you said. Well, the market is just absolutely flat now. I mean, the Nifty, look at that. So once again, a bit of a tease.